May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the pound USD cable, the pound USD. First, let's take a look at the economic calendar. Monday, no red folders, a couple of bank holidays for the US and Canada. I say Canada. Canada. I like that name. Canada. No, Canada. All right. So Tuesday, Wednesday, Thursday. Those are the days you want to get your trades in. Why? Because we have NFP on Friday. NFP on Friday, the best time to be flat before the news. All right. Wait till the news comes out and then trade the fade. Fade that news. Fade the news. All right. Let the dust settle and let it show its true direction. All right. Up until that point, you got good injections of liquidity and volume. Tuesday, Wednesday, Thursday with jobs data, employment data, and manufacturing PMI and all. Tuesday, Wednesday, Thursday are the time to get your trades in. Okay. Friday, you might want to sit out or wait until after the news. All right, enough of that. Now, we're looking at pound USD. All right, you can see it's been bearish. All right, that's this 2016 low. All right, we moved sideways, tried to make a new high. It failed to do so, and then we make a new low, breaking market structure. All right, see this wick here? This is the one that said, hey man, looks like we're breaking structure to the downside. No, sir. That turned into a wick. And if you see a wick taking out prior lows, it's because there is business to be taken care of up higher. Got it? Good, because that's exactly what happened. And then we did not make a new high. We broke structure to the downside, trading below those lows, including this one. All right. So we are bearish. This is the last leg of structure, and it happens to be a bearish leg. So until this high is broken, we are still bearish, and the low hasn't been touched yet. It's a protected low. All right. Is this a protected high? Well, it looks like the market wants to test that. This is the retracement. Why do I call it a retracement? Because after every uh, impulsive move, there is a retracement. That's the way the market moves. Higher highs, higher lows. Or lower low, lower high, lower low. All right. In this instance, it's a lower low. That's the impulsive move. The retracement is the correction. Impulse, correction. Impulse, correction. Impulse, correction. Usually these corrections are about 50%. All right. Sometimes it hits 618 or 718 with Fibonacci retracement tool, with the Fibonacci retracement tool, and then it pops down lower. That's why we use the fibs, because a lot of times it can make the right call. All right, now this here is a correction. Make no mistake about it. This is a correction to this impulsive move. All right. What we try to gauge is when the correction is over. When is it not a correction anymore? When is it a reversal? Haha. A reversal gives us a break of market structure. Now, these highs and lows and higher highs and higher lows inside of this bearish leg is our internal. All right. There was a bullish break of market structure here, a bullish break of market structure here. But these are internal breaks of market structure. This is not swing structure. This is swing structure. All right. When you have highs and higher highs, when you have swing highs, let's put it this way. If this is a swing low. When you have other swing lows, smaller ones on either side of it, it's because this is a swing low, and these are internal swing lows. These are internal structure. All right, they don't have the exact same significance as a swing, because you got to ask yourself, Why are we making higher highs and higher lows? Is it because we are in a retracement and that's the way it works? This is a mini uptrend inside of a very big higher time frame lower downtrend. You understand? You're going to have your mini uptrends and mini lower downtrends because it has to correct higher time frame impulsive moves. I hope you get that. If you have any questions, please ask in the comment section. Now, what I want you to see here is with this, where with that high to this low, you can see we have corrected. We've hit that 786, and you thought, hey, price is going to continue lower because we hit the 786. No, not so fast. We come back and we take that high, and you think, well, we're trading above that 786. We're probably going to continue up higher. That there is a possibility with that this bullish uh, 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 momentum can continue. But this bearish move is pretty significant. Let me get rid of all of this. Just keep it in mind. All right. That move is pretty significant. Why? Because this internal break of market structure here, we created an area of fair value and we broke past it and traded and closed above it. That creates an area of fair value here. Price comes back into that fair value to rebalance price. All right. And we're looking for price to continue higher from that. That's the way structure works. All right. And also, there was a bullish fair value gap under here. It looks like it's touching, but it's not. It's not actually touching. It's very close. It's not as low as that low. All right. Once price gets past this low, we're in the fair value, and price has rebalanced this imbalance. Okay, the fair value gaps are imbalances that the market tends to come back and rebalance. Okay, and we could say it's close enough here that price could continue up higher. But what I'm looking at is it created this area of supply here. The the move up and the stronger move down, all right, has created an area of supply. All right, but what I like to see when I see areas of supply is a displacement. All right, I want to see a gap. I don't see that gap. Price came back up in here and closed that gap. We could see that in itself is a bullish indication, and we could see price continue up higher. But let's take a closer look on the lower time frame, weekly. What we can see is this big institutional candle here. All right, price moved up, and we traded back below it. Traded and closed back below it. This creates a CISD. All right, changing the state of delivery. And it also creates an area of a natural area of supply. Price, we wait for price to go back up into that area of supply and then continue down lower from it. All right, we are in correction territory, folks. That's what I'm trying to express to you. All right, we created an area of a fair value gap here, a bearish fair value gap here. Price used it to go to make lower prices. That's the displacement I'm looking for when I want to see a break of market structure. We broke that low here and we have a displacing move and price used it. All right. We come down here. What did we create? What do you call it? Relative equal lows. All right. That's going to be a very strong draw on the market. Price is going to want to come back down here and sweep these lows and maybe tap into this. Remember what this was, the monthly bullish fair value gap. It's a monthly bullish fair value gap. I don't know why I have it at the wrong color, but don't you hold it against me, please. Okay. Now, all right. So price came back. price pull back into this area, and we no longer look at that area as it's revisiting the fair value gap. I do not. After it's been used once, I don't look for it to be used twice, all right, or three times or whatever, or we're still in the area of fair value. No, 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 no. It was shown respect here, and price continued down lower from it. It has been used. Got it. All right. Now, what can happen is when we see price start to trade through it, then we can stretch all the way over and we can say, oh, it's been inverted, an inverted fair value gap. All right. And it could be used instead of for resistance, it could be used now for support. All right, but that's not what happened. That has not happened yet. What we tend to do, what I tend to do, is look at the highs. It swept liquidity. I think we may see price continue down lower from here, from current price levels. All right. If we look at it weekly, this is an inside bar. It's inside the previous weekly candle, and you can see it's been rangy for the last 3 weeks, and we haven't gotten out of this range in quite a bit. All right, we've been here for a couple of months now. I mean, it's the summer, so that's to be expected. But I'm looking for September to bring direction, some trending. All right. Now, if we go down to the daily, I'm taking along with this, but bear with me if you would. All right. What I want you to see is that CISD, the change in state of delivery, was here. We swept liquidity. This makes a very legitimate area of supply here, just like I just showed you on the weekly. All right, price comes back into it. All right, this looks like a V-shaped recovery, and maybe we can expect higher prices from here. But the only higher prices I'm expecting is maybe we take these relative equal highs off, even though this high was already swept by this one. It's still stop losses above there, and I'm looking at those as relative equal highs, and we have these descending highs here. All right, those are all strong draws on liquidity. I think we're going to go a little bit higher before we come down and sweep out these relative equal lows down here, and finally rebalance the fair value gap from the monthly. That's what I'm looking at now. What I want you to see, what I want you to look for is this. Once we take this high, are we going to candle body close above that high? I want to see a candle body close above that high for me to start to entertain that we may be heading towards this high. Got it? Got it? I need to see price trade through this, not just wick above it. I want to see trade through it to chase these the relative equal the descending highs here for liquidity and come towards this protected high. We could see price come up here and then come down. I'm thinking we might see price move a bit higher first before it moves lower. But this is very compelling. Some people calling this a inverted head and shoulders. It looks nice. It's a V-shaped recovery. We could expect some higher prices from here for sure. All right, but how much higher? I don't know. There's a high here, and I'm thinking that if this is a protected high, until that protected high is taken, I'm not looking for buys. As soon as it is taken, I'm looking for buys. You understand? When I say taken, I mean price takes a candle body close above it. That's when I'll be looking for it as I'll be looking to buy the pound USD. Okay, so yeah, yeah, yeah. That's basically where I'm at on that. All right, so right now I'm looking for price to give me a little bit, and I'm looking for a break of market structure right around these highs, right in this zone. Okay, I need a break of market structure for me to jump in for sells. Got it? All right. I hope you enjoyed this video. It's kind of like a movie. Make sure you check out the pound, the Euro USD and the US dollar index videos that are just put out. Make sure so you can have better informed decisions. And leave all your questions in the comment section. I respond to every one of them. And I will see you in the next video. Thank you for watching.